Hey traders, welcome to the first video in our beginning trader training series. I know many of you who are viewing this video are either just starting to trade or maybe have not yet even started. This video series will act as your roadmap to help guide you down the shortest and least turbulent paths in the trading world. Many of you are also finding yourselves asking the question of where should I begin? Well, this is an opinionated question and has many different answers. Throughout this course, I'm going to provide you with what, in my opinion, is the most efficient and painless way to get through the beginning months as a trader. I have learned from the trading mistakes I made when I was a beginner, and I want to share this knowledge with you. The first thing any new trader needs to do is decide what market they are going to trade. For the purpose of this course, we'll cover the four main markets. The Forex market is an extremely popular market in which you are able to trade currencies from different countries throughout the world. This market is based on fluctuations in exchange rates. This market is also pretty much always open. The commodities market gives you the ability to trade a wide variety of commodities, ranging from corn to soybeans, from gold to silver. This market is based on changes in commodity prices. The futures market allows you to trade the broad stock markets, such as the Dow Jones Industrial Average. This market tracks the movement of the major market indices that we see on the news every night. Lastly, the stock market, which is the market that I trade, allows you to trade individual company stocks. This market contains thousands of different companies which can be traded. The best way to determine what market you want to trade is simply getting a demo account in the four major markets and spending a few days in each one. See if there is one market that feels natural to you, or one market that you seem to have more of an understanding for. I have always been biased to the stock market, which is why I am a stock trader. This is the route that I personally started on and the route that I'm still following. For a new trader with limited funds, the stock market might not be the best choice due to the pattern day trade rule. This rule states that a stock trader cannot open and close more than 3 positions in a given week if they have an account balance of less than $25,000. This restrictive rule is in place to attempt to protect new traders from blowing out their accounts. Because of this, the Forex and futures markets are extremely popular among new traders. Another route is to trade in the stock market, but make only a handful of trades each week, which can be very restrictive in the learning process, and I do not encourage this. The next step to starting up as a trader is finding a trading platform. There are two main different types of platforms: internet-based platforms and direct access platforms. Internet-based platforms are the ones where you type in a website into a web browser and it takes you to a page where you can make trades. These types of platforms are generally used by investors or people who do not trade very often. Direct access platforms are used by traders who make multiple trades every day. These platforms allow the trader to directly access the markets and gain streaming market data. This is the best route for someone who will be trading all day. There are thousands of different platforms that exist out there, and my recommendation of picking one that is right for you is to try out several demo versions and find the one that just seems to feel right and can be customized to fit your needs. Also, be sure you pick a platform that is stable, fast, and reliable. Once you find the market and platform you want to trade with, which should take at least a few weeks, you're now ready to begin your trading plan. The first aspect of your trading plan that you need to think about is if you will be a scalper, day trader, or swing trader. Let me first define these terms. A scalper is a form of a day trader who enters and exits dozens of positions a day in hopes of catching extremely quick market moves. Scalpers are typically in positions anywhere from a few seconds to a few minutes. A day trader is a trader who makes usually a handful of trades every day, but holds on for a longer period of time than a scalper. Day traders hold positions from a few minutes to a few hours. A true day trader, however, never holds positions overnight. A swing trader is a trader who tries to catch a slightly longer-term market swing. Swing traders typically hold positions anywhere from a day to a few weeks. Swing traders also expose themselves to the risk of overnight and weekend market moves. While you do not necessarily need to define yourself as one of these traders, it will help to have a basic idea of what type of trader you want to be for our next lesson. Our next lesson will cover how to begin your trading plan and trading journal. Until then, and as always, we wish you the best of luck with your trading.